Good afternoon. This week is all about jobs data. So we're going to talk a little bit about the Fed discussion and kind of break that down, talk a little bit of analysis about what happened last week. But we're going to focus a lot this week on jobs numbers and what's to come and what has already been rolled out here as we kind of move into the Thursday afternoon here before Labor Day. So because we have so much to cover, we are actually going to skip the question of the week this week, but I promise we will come back next week for that. So if you have any questions you'd like us to answer, please do send them our way. If we end up using yours, we'd be happy to send a copy on me for the great question and for something for us to cover here. My name is Brandon Steele, financial advisor with Mainsail Financial Group, and our goal every week is to bring you the market updates, kind of weed out all the noise, and really bring to you the areas that really matter and some things you can consider and how they relate to your portfolio, your planning, kind of all the above. So let's kind of jump right into it because there's a heck of a lot to cover here this week. And it's kind of interesting to get all of this data here right before a little bit of a breather on a 3-day weekend here as markets will be closed for Labor Day. So to start, we got to go all the way back to last week. So on Friday of last week, we had a lot of data come out. One of them being personal income. Personal income was up about 1.1%. And this is a big number. It was a good number. And it's led to a lot of debate about whether or not these wage increases can continue or what that may look like in the months or years really ahead. So very interesting topic of discussion. I think we may hear more and more about that, especially if we see another big number like that next month. But good to see incomes coming up. Along with that generally comes spending. So we also got a consumer spending number, which was up about 0.3%. No big surprise here. I think this was generally in line with a lot of expectations. But remember, this is also on the back of last month where we had a huge surprise on the upside. So spending is still continuing to happen as some of the money works its way through the system. It will be interesting to see if that continues. A good example actually is car sales. Car sales were actually a little slower for the month of August for the first time in a long time. Partly because of prices, but you also wonder, is that because some of the money has started to kind of work its way through, or where are we at there? So very important to watch the income and spending as we continue this recovery out of this COVID craziness we've been dealing with for far too long. And then on Friday, we also had Fed Chair Powell speaking. So on Friday, he was talking out in Jackson Hole. I think they ended up doing it virtually because of the Delta variant. So not sure if he was actually there or not, but anyway, he was talking about their policy and what they're kind of expecting. For those who follow us each week, you might remember that last week we had talked about a lot of the Fed representatives talking about this idea of tapering. We're talking about tapering, as you're probably hearing it referenced quite a bit. So finally, we got to hear from Fed Chair Powell and kind of the overarching voice of what may be to come. And generally, what we heard is he's not planning on tapering until early 2022. So, it's like every time we think there's going to be movement, it just gets pushed off and pushed off. It seems like they're very scared about what happened back in 2015. For some of those who follow the markets closely, it was called the taper tantrum. 2015 is where the markets started to really feel that impact. So the Fed is not supposed to factor in market fluctuations and market reactions, but it does seem like they are very worried about that and really just kind of looking for any reason to move slowly and make sure they voice things and kind of slowly roll out any changes. Again, I think a lot of times we end up getting this idea that something's going to change, and then the Fed's kind of always is pushing it further down the road than most had expected. So, this is the kind of that carrot that we talked about last week, this carrot of the idea of tapering or raising rates, which obviously is going to be a long ways down the road if this is the case, but they just kind of keep pushing it and taking it further out. So very interesting to watch, but I think the very clear stance maybe as time continues to prove this is that the Fed is going to be very accommodative. They're not going to make moves. They're all, if there's any uncertainty, it's very likely they'll err on the side of caution there. So important to watch that. And of course, I think he will talk again at the end of September. So we've got a little break here till we hear back from him. And then also on Friday, We had all-time record high corporate profits come out. There was a corporate profits number that came out, and it was up 9% for the second quarter of 2021. And again, if you look at that when that data came in, the markets haven't moved at all since. We've had about 75%, so 3/4 or so of the companies have beat earnings, and a lot of them by a mile, right? A lot of them have beat by significant amounts. But really, this month was a little bit better. We finally saw some movement. For the most part, though, we've seen some kind of flatline here. So the challenge is, as we've talked about, is that we've kind of built up these companies. We have this crazy high expectation. We're expecting this to be the best treat, the best dessert ever. And it turns out to be good, but because we built this up so much in our heads, it just seems to feel mediocre, right? We have these crazy earnings that just kind of feel mediocre. Although, if we look backwards, markets would normally have been reacting very strongly with what we're seeing. So it's good to see. Obviously, it's very important as we continue to recover. But keep in mind, those expectations are just so dang high that we've got this huge bar to hop over. Fast forward, that was all Friday. So you see why we're not doing question of the week here this week. Fast forward to this week. On Monday, we had pending home sales come out down 1.8%. Second month in a row that pending home sales were down. So the housing market, continues to be a strong story, but something to watch here. Who knows, maybe this is a bit of a slowdown as we move into the fall. But obviously, important to watch that. And then Tuesday, consumer confidence came out at 113.8 versus I think the general expectations were around 123. So this is the story from last month as well, that it seems like people are starting to get a little more nervous about what's going on. It seems like most people are pretty optimistic, but as the market continues to creep up, we've got the Delta variant concerns. I think people are just starting to maybe get a little more concerned about where we're at. So that's what this consumer confidence kind of refers to, and kind of measures the pulse, I guess, of the general population. Wednesday, this week is all about jobs. So Wednesday, we had a terrible jobs number. ADP employment report came out at 374,000 jobs added versus 600,000 expected. So, near half of what we were hoping for. It's not good at all. That said, I think that generally we put a little more weight on what's to come tomorrow with the non-farms payroll number. So pay attention tomorrow. That's gonna be really important. And of course, we'll catch you up next week after the holiday as well. But that non-farms payroll number is generally where we put a little bit more emphasis. And then today we had initial jobless claims come out, as we do every Thursday. It was 340,000 jobs lost, pretty close to our estimates or pretty close to the estimates, for yet another week. I think that's 3 or 4 weeks in a row that we've been kind of right at this level, very close to what's expected. So good to see that. But obviously, hopefully that continues to drop. All right, so next week, we're going to talk way more about jobs because, again, tomorrow we have non-farms payroll number and unemployment. Last month, if you guys remember, this non-farm payrolls was a huge upside beat. They added I think it was 943,000 jobs or something like that, and we're only expecting somewhere around 700. So this month, I think they're expecting about 700 again, and love to hear what you think. Let me know if you think it'll be more or less than 700,000 jobs added for the month of August. If you want to give me an actual number guess, closest number we'll send a copy out to as well. But it'll be interesting to see this. We've got ranges everywhere. I've heard some things down to 400,000, all the way up to 1 million jobs added. So really pay attention tomorrow. We'll catch you up next Thursday, but let us know what you think. Let me know if you think it'll be higher or lower. Again, closest number, if you want to share it with us, we'd be happy to send you a copy on us for whoever gets closest to the actual number tomorrow. And then remember, markets are closed Monday. So hopefully everybody can enjoy your holiday weekend if you get one. There is no trading Monday, so whether you're working or not, don't worry about the markets too much because they will not be open. And then we'll see you next week with the jobs data and some other updates through the course of next week with the shorter trading week. Although we had a lot to cover and maybe too much to handle a question of the week here this week. Again, let us know if you have any questions. We'd be happy to cover them in the weeks to come. Have a great Labor Day weekend, and we'll see you next Thursday.